You want to invest in real estate? Heard someone bought a house with no money down? Watch TikToks claiming passive income is easy? Kill that illusion now. This market isn't for dreamers or emotional borrowers. It's a battlefield, and only those with strategy, discipline, and real data survive. If you step in with empty pockets, wrecked credit, and a get-rich-quick mindset, the system will crush you. But if you're ready to learn the right way, step by step, then million-dollar assets won't feel so far off. Now let's go through every step the right way to transform you from an outsider to a true real estate investor. Want to get rich from real estate? Start by killing your illusions. Real estate is not magic. It's not a golden ticket that makes you rich after one click, and it's definitely not a playground for lazy dreamers. This game demands preparation, discipline, and a clear strategy. If you step into this market with a let's try it attitude, you'll get eaten alive by the system you don't understand. You can't play a game without knowing the rules. And in real estate, the first rule is simple: think like an owner. If you don't shift your mindset, the market will do it for you, brutally. Nobody hands over a six-figure asset to someone with no plan and no management skills. People still dreaming of zero-down deals, automatic rentals, and overnight passive income are trapped in delusion. You can absolutely get rich, but not if you think hope is a strategy. The real estate engine runs on knowledge, action, and sacrifice. If you don't fuel it, it won't move. And if you wait too long, someone else will take your seat. This market rewards clarity, not comfort. If you want real assets, you need to think like someone who owns them. Buy the property, rent it out, pay down the loan, build the cash flow. This isn't fantasy. It's a clear path. And you can start it today. But to do that, you have to leave your comfort zone behind. Drop the laziness, ignore the empty hype. Accept this: real estate isn't for the wishful. It's for those willing to fight, learn, and take the damn shot. Fortune doesn't wait for the hesitant, it follows the decisive. No good credit? You're out of the game. In real estate, the bank is the gatekeeper, and your credit score is the key. No credit, no loan. No loan, no property. No property, no income. That's the harsh truth. But most beginners skip this step entirely. They think having some cash is enough. It's not. If your credit score is weak, banks will either reject you outright, or worse, approve you with a sky-high interest rate that kills your profits before you even start. That's how amateurs lose the game before playing a single round. A strong credit score gets you lower interest rates, which puts more money in your pocket every single month. A weak score makes you a target. Your loan costs more, your cash flow suffers, and your dreams shrink. People ignore their credit thinking it's not urgent. That ignorance is expensive. Improving your score isn't hard, but refusing to do it is financial self-sabotage. Every point matters. Every point is power. You're either building leverage or giving it away for free. Start now. Get a credit card. Use it wisely. Pay it off on time. Keep your usage low. That's it. You don't need to be rich to build credit. You need to be responsible. What's dangerous isn't a low score, it's ignoring it. This market doesn't care about excuses. It only rewards results. If you want to own real estate, stop asking how much you can borrow. Ask whether you've earned the right to borrow at all. The sooner you get honest, the sooner you gain control. No money down is a scam. It only exists on TikTok. Let's get this straight. No money, no deal. The fantasy of buying real estate without cash is pushed by people selling hype, not property. In real life, 999 out of 1,000 deals require you to put money down, typically 5% to 20%. And that's not including repairs, closing costs, and reserves. If you can't save even the minimum down payment, you're not an investor. You're a dreamer watching others play the game. This isn't harsh, it's honest. The market has no pity for the unprepared. Some people truly believe that just wanting it badly is enough. They have no savings, no credit, no stable income, but expect the keys to a property. And when reality hits, they blame the market, the banks, the system, anything but themselves. But the truth is brutal. If you can't control your own finances, you're not ready to control an asset. Investing is not built on hope, it's built on capital. Cash buys you leverage, credibility, and options. No cash, no shot. Period. Want money to invest? Then make it, keep it, protect it. Cut the dumb spending, increase your skills, take on more responsibility, live below your means. Wealth starts with what you do when nobody's watching. This isn't motivational fluff, it's survival. Every dollar you save is one brick in your foundation. You're either building your launch pad or digging your grave. Don't wait for perfect conditions. Build the habit now. Because when opportunity shows up, it doesn't wait for you to get ready. It rewards those who already are. Declaring low income to dodge taxes? You're choking your own future. Everyone loves the idea of paying less taxes. But when you slash your income on paper to look poor, you're also slashing your loan eligibility. Banks don't care how much money you say you make. They care what your tax return shows. The more you write off, the less they'll lend you. And one bad year can sink your average. That means smaller loans, fewer options, and missed opportunities. Your smart tax strategy could be the reason you can't buy the property you actually want. Real estate isn't for those who hide their income. It's for those who know when to show it. Self-employed? The bank will average your last 2 years. If you tank 1 year with aggressive deductions, you weaken both. Even if you make more later, that old return drags you down. You thought you were saving money. What you did was sabotage your buying power. And by the time you realize it, the deal's already gone. That's not a glitch. That's how the system works. Play it or get played. Here's how pros handle it. Before filing taxes, they meet with a lender. They show their numbers. They ask, does this qualify me for what I want? If not, they adjust. Sometimes that means reporting more income and paying a bit more in taxes. But it unlocks bigger deals. Other times it means fine-tuning deductions to hit a target. This is strategic finance. This is playing the long game. Tax returns aren't just for the IRS. They're your resume to the bank. Make it count. Make it intentional. House hunting without knowing your loan limit? You're setting yourself up for failure. Biggest rookie mistake? Shopping without knowing your price range. People fall in love with a home, then find out they can't afford it. Suddenly everything else looks worse. They get frustrated. Their standards warp. Emotions take over. It's not just heartbreaking, it's dangerous. You start chasing feelings instead of numbers. And feelings don't cash flow. This is how smart people make dumb decisions. Know your limit before you search, or you'll sabotage your own investment mindset before you even start. The solution is simple. Get pre-approved. That's your hunting license. Without it, you're just browsing. Pre-approval tells you what the bank will lend, at what rate, and what monthly payment to expect. It gives you negotiation power. Sellers take you seriously. You move faster, and you avoid wasting time. This step costs nothing, but gives you leverage, and leverage wins. Without it, you're flying blind. With it, you're hunting with a scope. Precision beats guesswork every time. Worried multiple inquiries will hurt your credit? Don't be. Credit bureaus treat rate shopping as a single hit if it's within 30-60 days. You can and should shop around. Play banks against each other. Get the best rate. That's not risky. That's smart. People who only ask one bank pay more. People who negotiate get options. This isn't about being cheap. It's about being strategic. Every fraction of a percent you save on interest compounds over decades. Don't just get a loan, win the loan game. The wealthy don't chase hotspots. They predict the next wave. Biggest mistake of beginners? Buying in places that have already peaked. They flock to downtown areas after prices have exploded, hoping for more. But the smart money? They buy where growth is about to happen. They invest on the edge, right next to booming neighborhoods. Why? Because when the core gets overpriced, people move outward. Those areas rise next. Smart investors don't chase, they anticipate. And when the wave comes, they're already riding it. To spot the wave, follow the money. Where are new cafes opening, restaurants renovating, apartment buildings going up, roads expanding? Those aren't just conveniences, they're indicators of capital flowing in. You won't find this on Google Maps. You'll find it by driving around, on the ground, observing. Real estate isn't just about numbers, it's about reading the signs. Infrastructure, migration, demand. That's how investors find opportunity before the crowd shows up. The best way to see value is to see everything. Go to every open house you can. Compare neighborhoods, prices, property conditions. Take notes. Track trends. The more you see, the more you understand what's overpriced, what's underpriced, and what's a deal hiding in plain sight. Real knowledge comes from exposure. When the right deal appears, you won't hesitate, you'll strike. Real estate doesn't reward guesses, it rewards awareness. The more data you have, the sharper your instincts become. Bidding with emotion is how people burn money. One of the most dangerous traps in real estate is emotional buying. You walk into a pretty home, feel that spark, and overbid just to lock it in. That's not investing, that's gambling. This isn't about how a place makes you feel. It's about what it's worth. Smart investors don't chase butterflies, they chase numbers. And if the math doesn't work, they walk away. Even from dream homes. Especially from dream homes. Missing out on a few properties won't kill your chances, but overpaying out of fear or ego will kill your margins. Some investors submit dozens of low offers before landing a deal. They're not desperate, they're patient, they know the numbers, and they stick to them. Real estate is a long game. A great deal tomorrow is better than a bad deal today. Patience isn't weakness, it's a weapon. But don't be rigid to the point of stupidity. Sometimes, paying a few thousand more to secure the right property saves you months or even years of wasted time. Waiting for the perfect deal often costs more in market growth than the extra you would have paid today. Being cheap in the short term can make you broke in the long term. Use logic, not pride. The goal isn't to win the negotiation. The goal is to win the next 30 years. Inspections aren't a cost, they're your negotiation weapon. Most buyers see inspections as an expense. Real investors see them as leverage. This is where you uncover the truth beneath the paint. Every flaw is a reason to renegotiate. When you hold that inspection report, you don't just spot problems, you hold power. The unprepared say yes to asking price. The prepared come back with demands. This isn't just due diligence, it's deal control. Inspections cost a few hundred to a couple $1,000s. But smart investors often recover double or triple that through credits, repairs, or price reductions. Call 1 or 2 contractors to walk the property during the inspection. Get real quotes, not guesses. You don't need to fix things immediately, you just need numbers. Bring those quotes into your negotiations. Now you're not guessing, you're dictating terms with data. That's how professionals play. Inspections also protect you from disasters. Some homes look fine but hide foundation cracks, electrical nightmares, or roof damage. Skip this step and you're buying a liability. If a deal turns out to be too risky, the inspection gives you a legal way out with your deposit intact. This isn't optional, this is survival. The difference between a winning deal and a ticking time bomb often lies in a $500 inspection report. No more. Pay less. Protect everything. Renovation isn't for aesthetics, it's how you print equity. When most people get the keys, they think about decoration, wall colors, furniture, their personal style. That's consumer thinking. You're not decorating, you're increasing value. Every dollar must serve one of 2 goals: raise the property value or increase rental income. Anything else is vanity. You're not designing your dream home, you're building a cash machine. Invest like a CEO, not like a tenant. Outdated floors? Install clean, low-maintenance vinyl. Peeling paint? Go neutral and bright. Ugly kitchen? Replace handles, refinish cabinets, improve lighting. These aren't huge projects, they're small changes that create big jumps in perception and rent. Fast, cheap, and impactful. That's what you want. Cosmetic upgrades with a tight timeline and solid ROI. You're not flipping, you're optimizing. This is the investor mindset: minimal risk, maximum return. To save money, get at least 3 quotes. Don't go with the cheapest, go with the most transparent. Separate material and labor costs so you know what you're paying for. Always add a 15 to 20% buffer. Renovations always run over. Always. That's not pessimism, it's reality. Pros plan for chaos. Rookies get blindsided. If you can't control your budget, you can't control your return. Smart investors manage risk before it becomes regret. Renting isn't the end, it's the start of your cash flow engine. Keys in hand, renovations done, that's not the finish line. It's the launch pad. Renting is where the strategy becomes income. Every vacant day bleeds money. Every pricing mistake loses you profit. This isn't passive yet. This is where you become a business operator. Property secured, now it's time to turn it into a performer. This is where cash flow begins, or dies. Listing a property is an art. Don't post blurry photos, weak descriptions, or vague prices. Highlight strengths. Target the right tenants. Use free platforms like Craigslist or local apps. Screen tenants hard. Credit, employment, references. A bad tenant can wreck a year's profits, A great one makes everything smooth. This isn't about luck. It's about systems. The right screening saves time, money, and sanity. Good tenants build great portfolios. Once the tenant's in, the engine runs. Loan payments get made by someone else. Rent covers costs. Equity builds. Value grows. Cash hits your account monthly. This is where the work pays off. You now own a productive asset. And when the mortgage ends, it's all yours. At this point, you don't just own a property, you own leverage. Repeat the process. Scale up. This is how wealth is built, not from dreams, but from systems. Real estate isn't magic. It's a cash machine, if you know how to run it. Real estate is not a gamble. It's a game of data, discipline, and precise decisions. If you build credit, save real money, declare smart taxes, pick strategic locations, negotiate hard, renovate with ROI in mind, and screen tenants like a pro, you win. But if you enter with shortcuts, feelings, and fantasies, the market will eat you alive. No one hands out financial freedom. You earn it with execution. Start now. Check your credit. Track your spending. Build a clear plan. Don't wait for the right time. Become the right person. Opportunity doesn't knock for the lazy. It walks straight toward the prepared.